Before we start this video, do like and subscribe to our channel and not miss on any updates.
Hello my dear CA Final students, this is Shivateja here from IndigoLearn and I am right in front of you to discuss the interesting amendments for CA Final Indirect Tax laws which are applicable for May 2025 examination. And this video is very important for those who are writing exam in May 2025 because this video holistically covers all the important amendments which are relevant for May 2025 examination. So without any second thought, without any delay, kindly ensure to watch this video starting till the end so that all the amendments will be clarified and you are perfectly intact with all the amendments relevant for May 2025 attempt. So without any delay, let me start the discussion, my dear friends. I have prepared a beautiful document which covers all the amendments and the link of this document also will give in the description so that you can happily download this PDF. Clear? You need not take too much of effort in watching 8 hours video, 10 hours video, 15 hours video and all. This video will be comprehensively covering all the amendments, so don't worry at all. Come on, my dear friends. Let me start the discussion. I have segregated chapter-wise amendments. So right from chapter 1, we'll see till the end what are all the important amendments relevant for your exam. And some amendments while discussion you will find that, sir, last time only you told this point before itself to us. You will find that for a simple reason because some amendments are not new points. Some amendments are those which we already covered before itself. But again, I am reiterating them so as to have a better clarity for our discussion. Are we clear with that? So please, kindly, with utmost confidence, with utmost sincerity, listen to all the points very clearly. Make sense? Come on. First, CA Final May 25 Indirect Tax Laws Amendments. First point, my dear friends, Introduction to GST. Levy of GST compensation cess is extended till 31st March 2026. I'm sure we guys know very clearly what is GST compensation cess. We all know that GST is a destination-based consumption tax wherein the tax will go to that state where goods or services are consumed. Correct? Once upon a time prior to GST, we followed a concept called origin-based taxation, but in GST we shifted to destination-based consumption tax. So the tax will go to that state where goods or services are consumed. Now, because of this shift in the taxation regime, there have been some states who have been losing revenue on account of introduction of GST. What kind of states? Those states which are more into manufacturing sector, those states lost revenue because they are not into consumption driven. In order to compensate these states who have lost revenue on account of introduction of GST, government has introduced GST compensation cess on some products like tobacco, motor car, aerated waters. On these kind of products they have introduced GST compensation cess. It's an additional amount which is being charged over and above tax. And this amount will be used in order to compensate those states who have lost revenue on account of introduction of GST. Now, initially when this was introduced, they told that this will be in force for a period of 5 years from introduction of GST. But now they extended this till 31st March 2026. That is the amendment. Clear? Next point. No proceedings of GST Council shall be invalid merely because there is any defect or there is any vacancy. Sir, we all know what is GST Council. GST Council is governed by Article 279A where there are central members, state members who sit together and take the decision. Central side there are two persons. Number one, Union Finance Minister. Number two, Minister of State for Finance. And from state side we have got every state representative. And the interesting point to be noted is that center has got a weight of 1/3 weighted vote and all states put together there is a weight of 2/3. And ultimately, in order to pass a resolution, there should be 3/4 majority. Unless there is 3/4 majority, resolution cannot be passed. So resolution can be passed only when there is a 3/4 majority, my dear friends. So that's why we always keep saying that center alone, state alone cannot independently take a decision. The decision has to be collective by center and state together. And this GST Council decision, what they take, we cannot tell it is invalid just because there is any defect or there is any vacancy. That is what they are trying to clarify. A very simple point, my dear friends. I am sure we are clear with this point, everybody. Very good. Next point. Let me look at the amendments in supply topic, my dear friends. Supply dealt by section 7, a very, very important discussion. We all know that. Come on, see now. Amendment in Schedule 3. Friends, what is Schedule 3? Schedule 3 deals with transactions which are neither regarded as supply of goods nor regarded as supply of service. The concept of supply is given by section 7, and in that there are 3 important schedules, my dear friends. Schedule 1 talks about transactions regarded as supply even though there is no consideration. Schedule 2 talks about what are regarded as supply of goods, what are regarded as supply of services. Schedule 3 talks about the transactions which are neither regarded as supply of goods nor regarded as supply of services. That means if it is not a supply of goods, it is not a supply of service, then GST will not apply. In that, one interesting point what we had before was actionable claims other than betting, gambling, lottery. Now this point has been modified now, stating that actionable claims other than specified actionable claims. That means what? On actionable claims, GST will not apply, but on specified actionable claims, GST will apply. Now what is covered in specified actionable claims? That is important. Please see that. Specified actionable claims covers, come on my dear friends, what is covered there? Let me highlight this first. Specified actionable claims covers betting, casinos, gambling, horse racing, lottery, online money gaming. So betting, gambling, horse racing, casinos, online money gaming, lottery, these are all covered in what, my dear friends? These are all covered in specified actionable claims. That means on all this, GST will apply. Now student might start thinking that, sir, online money gaming and all these are illegal, right? Sir, GST law doesn't talk, or income tax law also for that matter, doesn't talk about legality. We only talk about taxability. Legal or illegal is secondary. That we'll talk separately. That judicial proceedings will come. But taxability is for sure. You cannot tell a statement, it is illegal, so I will not pay tax. For tax purpose, there is no difference between legal or illegal. So what is the point, my dear friends? The point which is amended in Schedule 3 is actionable claims other than specified actionable claims. That means on actionable claims, GST will not apply, but on specified actionable claims, GST will apply. Specified actionable claims covers betting, gambling, lottery, horse racing, online money gaming, and also casinos. And let me tell you for your knowledge, practically the GST rate on all this is 28%, my dear friends. Getting the point? Come on, see you next. Online money gaming means online gaming in which players pay or deposit money or money's worth, including virtual digital asset, in the expectation of winning money or money's worth, including virtual digital asset, in any event, including game, scheme, competition, or any other activity or process, whether or not its outcome or performance is based on skill or chance or both. It doesn't matter whether it is based on skill or it's based on chance. And whether the same is permissible or otherwise under any other law for time being in force. See the last line? Whether it is permissible or otherwise under any other law for time being in force. That means whether it is legal or illegal, it doesn't matter, it will still become taxable. Getting the point, everybody? So friends, I'll repeat once again, my dear students, the concept now is that in Schedule 3, the point now is actionable claims other than specified actionable claims. That means on actionable claims, GST will not apply, but on specified actionable claims, GST will apply. And what is covered in specified actionable claims is betting, gambling, lottery, horse racing, casinos, online money gaming. And what is online money gaming? We just discussed that. Are we clear with that? Very good, my dear students. My dear students, don't worry. Any doubts you get, feel free to comment in the YouTube. In this video, you can comment. I'll be more than happy to reply. Or you still have concern, we have wonderful forums on IndigoLearn platform. You can happily write your query on the forums. We'll definitely reply back to you. I will personally reply to your forum query. Don't worry. Clear? Next. Next part. Supply of food and beverages at cinema hall is taxable at restaurant service. So it's so very common that when we go to theaters to watch a movie, especially a multiplex screen or any other screen for that matter, in the break time or before the movie, we tend to purchase some snacks, maybe some popcorn, nachos, whatever it is. Now, what is the tax treatment for that popcorn, nachos, what you buy during the break or before the movie? The concept is very simple. They have clarified that this popcorn, nachos or samosa, whatever you are buying is regarded as restaurant service only, and accordingly GST will apply. But imagine a case where the movie ticket and the popcorn is bundled together, naturally bundled. And the principal supply is, of course, exhibition of film. In that case, we'll treat it as composite supply and we will tax at the rate of principal supply. See, come on. Cinema operator may run this refreshment, eating stalls, kiosk, the counters where you can directly pay through QR code and get the products. Counters, restaurant themselves, or they may give it on contract to a third party. The customer may like to avail the services supplied by the restaurant or snack counter or choose not to avail these services. It's option. It's not mandatory that when you go to movie, you have to buy a popcorn, right? Exactly. Next. Further, cinema operator can also install vending machines like Coke or some cool drinks, water bottles, vending machines, or supply any other recreational service such as through coin operated machine which a customer may or may not avail. It is hereby clarified that supply of food or beverage in restaurants is restaurant service as long as the food or beverage is supplied as a part of service and it is supplied independent of exhibition of cinema service. But where the sale of cinema ticket and supply of food are clubbed together and such bundle supply satisfies the test of composite supply, then the entire supply will attract GST at the rate applicable to service of exhibition of cinema. Obviously because that is principal supply. Obviously because that is what supply, my dear friends? Principal supply. Composite supply is always taxable at the rate of principal supply. Are we clear with this, everyone? Excellent. So that's the story of this interesting amendment in supply topic. Moving forward, next point. In case of motor insurance claims, very good. When I say motor insurance claim, what does that mean? So let's say we are going in a bike or car, some accident has occurred. Maybe because of our mistake or some other person mistake, some accident has occurred. Then we are making the insurance claim. Now let us say the car or the bike is completely damaged. When the vehicle is completely damaged and we are making insurance claim, there are two possibilities here. That is, the damaged vehicle is with us only and insurance company is paying us 8 lakh rupees as compensation. Situation 1. Situation 2. Insurance company is taking away that salvage, that means the scrap which is left out, and they are paying a higher compensation. That means, I'll give an example like this. Let us say we are keeping salvage with us only and they are paying us 8,50,000. Clear? Second situation, they are taking the salvage away with them and they are paying us 8 lakhs. Possible or not? Exactly. Because salvage has got some value. A scrap value will be there for that salvage. See now. There are two possibilities. Number 1, deduct the salvage or wreckage of the motor vehicle as deductible from the claim amount paid to the insured. The salvage remains the property of the insured and insurance companies are not liable to discharge GST liability on the same. Obviously because the salvage is there with the insured only. It is not being taken away by insurance company. Next situation. They do not deduct the value of salvage and pay the full amount of insurance claim. Then the salvage becomes the property of the insurance company. And once the salvage or the scrap will go to the hands of insurance company, they will not keep quiet. They will sell that salvage. Correct, my dear friends? And the insurance company will be obligated to discharge GST on supply of salvage to the salvage buyer. A very interesting point. So if the salvage is left with the insured only, then there is no GST liability because that salvage is not being sold by insurance company. But if salvage is taken over by the insurance company will subsequently supply that salvage to some third party. When they supply that salvage to third party, at that time they are required to pay GST on supply of that salvage value. Clear? Exactly. Next. GST on location charge or preferential location charge collected along with consideration for sale or transfer of property. Sir, it's so common that whenever we go to buy some plot or buy some residential apartment, the person will tell the flat price is 8,000 per square feet. But if you want corner plot, 8,500 per square feet. If you want east facing, 9,000 per square feet. Northeast facing, 9,500 per square feet. They charge more because of preferential location. Something like corner plot, two-side road, northeast. This Vastu logic which comes into play. Now, what is the treatment for that location charges, what they collect? It's a part and parcel of sale of land and building. Obviously. Come on, see that, my dear students. PLC paid along with consideration for construction service forms part of composite supply, where the supply of construction service is the main service and PLC is naturally bundled with it and eligible for same tax treatment as the main supply of construction service. A very interesting point. Next, taxability of employee stock option plan, employee stock purchase plan, or restricted stock unit provided by foreign holding company to employees of Indian subsidiary company, where the cost of shares is reimbursed by domestic subsidiary company. I'll give an interesting practical example. Let's say one person, Mr. X, who is working as an employee of Microsoft India. Along with salary which is coming from Microsoft India, he is getting some stock or shares of Microsoft US. This is generally common in a lot of multinational company where an Indian employee is getting the shares of the foreign company. The foreign company means not some other company, their own holding company. In my example, Microsoft India employee is getting shares of Microsoft US, or Google India employee is getting shares of Google US. In that case, actually, to that employee, who is supposed to pay salary? Microsoft India is supposed to pay salary. But who is giving shares? The shares are being given by Microsoft US. Then what happens is Microsoft India will reimburse that value of the shares to Microsoft US. The cost is reimbursed. On that cost, there is no tax treatment. But let us say the cost of shares is 1 lakh, but Microsoft India is paying to Microsoft US 1,10,000. That extra 10,000 is consideration which is received for import of service. Import because Microsoft US is in US, Microsoft India is in India. And once it is import of service, it will come under reverse charge mechanism. See that line? If it is reimbursed on actual cost to cost basis, then it is not a supply, as securities are neither goods nor service, obviously. But next line you see. If additional amount, what is that line, my dear friends? Additional amount. If additional amount over and above the cost of shares or securities is charged by the foreign holding company from domestic subsidiary, then GST would be leviable on RCM basis for supply of facilitating or arranging transactions in securities. I am pretty confident and sure that you are getting very good clarity on this point, my dear friends. Excellent point and a very important point. And that's the end of story for amendments in the topic of supply. So let's not delay, my dear students. Let's proceed further. Let's talk about amendments in next topic, that is charge of GST, where we have the concept of composition scheme and reverse charge mechanism. Section 9, Section 10 composition scheme. Exactly. Come on. Charge of GST. A new point added, RCM in case of goods. Metal scrap, a very, very important point. We know that RCM is there in case of goods such as cashew nuts not shelled or peeled, tobacco leaves, tendu leaves, raw cotton when supplied by agriculturists to a registered person, confiscated goods by the government, lottery distributor, priority sector lending certificates, all these are covered in RCM in case of goods. A new point added is metal scrap. That too RCM will come only when it is supplied by unregistered person to any registered person. Then it will be taxable under reverse charge mechanism. So a latest point, a very important, high possibility that question may trigger in the examination. So in case of supply of metal scrap, where supplier is unregistered person, recipient is registered person, that will be covered under RCM. Next slide. Tax on services supplied by director of a company in his personal capacity, such as renting of property to company, is not payable under RCM. Friends, we know that services supplied by director to body corporate is covered in RCM. Do we know this point? Yes. But they have clarified one important point very clearly, that service supplied by director of a company to the body corporate is covered in RCM only if service is supplied by director in his professional capacity. If director is supplying some services in his personal capacity, then the provisions of RCM will not apply. When I say personal capacity, what does that mean? A classic example, director is having his own immovable property and is giving that immovable property on rent to the company. In that case, he is not supplying service as a director in professional capacity. He is giving that service in personal capacity. In that case, RCM provisions will not apply. A very interesting point, friends. See, come on. Tax on services supplied by director of a company or body corporate to the said company or body corporate is payable by the company or body corporate under reverse charge mechanism. It is clarified that services supplied by director of a company or body corporate to the company or body corporate in his personal or private capacity, such as service supplied by way of renting of immovable property, are not taxable under RCM. Only those services supplied by director of a company or body corporate which are supplied by him in the capacity of director of that company or body corporate, that will be taxable under RCM in the hands of company or body corporate. A very interesting amendment with respect to the topic of reverse charge mechanism. 2 points I discussed with you. Number 1, metal scrap. If supplier is unregistered person, recipient registered person, RCM will come. Second point, services by director to body corporate is generally covered in RCM, but if director is giving service in his personal capacity, then the provisions of RCM will not apply. That's the point. Next, moving forward to the topic of time of supply, my dear friends. So, time of supply. Section 12, 13, 14, 12 is about time of supply for goods, 13 for time of supply for services, 14 for time of supply in case of change in rate of tax. We know that, right? Now, we are talking about a clarification which is given on time of supply in respect of service of construction of road and maintenance of National Highway Project. Sir, NHAI, National Highway Authority of India, they construct national highways and we are giving service to NHAI. In hybrid annuity mode model, which is called HAM model, hybrid annuity mode model. Here what happens is, there are a lot of private companies who are engaged in infrastructure business. They put tenders in the government and they get a contract for construction of road and also maintenance. What government tells is, you put your own money, you do the construction of highway. Okay? You put a toll gate, you collect toll charges. They will clearly tell for 15 years, 16 years and all. You collect that money. After that, you please walk out. That's how this HAM model works, hybrid annuity mode model. They have clearly clarified that this kind of service is clearly called continuous supply of service. Continuous supply of service, because we know that continuous supply of service means service is supplied under a contract on recurring basis for a period more than 3 months, where a statement is issued periodically for settlement of amounts. And we know that in case of continuous supply of service, generally, invoice is supposed to be issued when if the due date for payment is ascertainable from the contract on or before due date of payment. And if the due date for payment is not ascertainable from the contract on or before date of payment. And if the payment is linked to an event or milestone on or before completion of such event or milestone, that is the time when invoice is supposed to be issued. And this is a very important point, because I'll tell you why. Because in case of services, section 13(2) clearly specifies that if invoice is issued within the prescribed time, time of supply will be date of invoice or date of payment, whichever is earlier. And if invoice is not issued within the prescribed time, then the time of supply will be date of completion of service or date of payment, whichever is earlier. That is why this is very important. Are we clear? See next. Under the hybrid annuity mode model of NHAI, the concessionaire has to construct the new road and provide operational maintenance of the same, which is generally spread over a period of 15 to 17 years. And the payment of the same is spread over the years. What is the time of supply of service for payment of tax under the said service under HAM model? What is HAM? Hybrid annuity mode model. Under the HAM of concession agreements, the highway development projects are under design, build, operate, transfer model. They are design, build, operate and they are transferred. Where the concession is required to undertake new construction of highway as well as operational maintenance of the highway. And the payment terms for the construction portion as well as operation and maintenance portion of the contract are provided in the agreement between NHAI and the concessionaire. In HAM contract, the payment is spread over the contract period in installments, and the payment for each installment is to be made after specified periods or on completion of event. And the same appears to be covered under continuous supply of service. That's what I just told you, my dear friends. it is clarified that the tax liability on the concessionaire under the HAM contract, including on the construction portion, would arise at the time of issuance of invoice or payment, whichever is earlier, if the invoice is issued on or before specified date or completion of an event. Getting the point, everybody? Very good. Next. Clarification on time of supply of services of spectrum usage or similar services. So spectrum is a telecom license which is given by DOT, Department of Telecommunications. This is also like a continuous supply of service only, my dear friends. Under spectrum allocation model followed by Department of Telecommunication, the bidder, telecom operator like your Airtel, Jio and all, they bid for securing right to use spectrum offered by government. That means supplier is government, recipient is the telecom operator. Here service provider is Government of India and the recipient is telecom operator. GST is to be discharged on supply of spectrum allocation service by recipient of services on reverse charge basis. Obviously, my dear friends. In case where full upfront payment is made by telecom operator, GST would be payable when the payment of upfront amount is made or is due, whichever is earlier. And in case where deferred payment is made by telecom operator in installments, the same will be considered as continuous supply of service. Since the supply of services spectrum usage is agreed to be provided by Department of Telecommunication to a recipient, that is telecom operator, for a period exceeding 3 months with periodic payment obligations. So that's the story of this interesting amendments in time of supply topic. So we discussed amendments in supply topic, we discussed amendments in charge of GST topic, we are done with amendments in time of supply also. Now let's move to amendments in exemptions topic, my dear friends. Come on friends. Now let's look at the amendments in the exemptions topic, my dear friends. Without any delay, let's proceed further. Come on, see now. Exemptions under GST. As you all know, this exemption is an important topic, generally keeps coming in the examination, either as a direct question or as a part of the main holistic question where we get computation of net GST liability, where they combine some points of input tax credit, time of supply, place of supply, valuation, exemptions, all they combine together and ask a holistic question. That is also possible. So please see that. Exemptions under GST. Service provided by government. Services provided by Ministry of Railways, Indian Railways, to individuals, only to whom, my dear friends? Individual, by way of sale of platform tickets. Platform tickets we know, right? Generally when we are not boarding the train, but we are going to give a send off or pick up someone, we are required to take a platform ticket. On that platform ticket, earlier there was GST, but now exemption has been brought for that. See that. Sale of platform ticket, facility of retiring or waiting rooms, clock room services, that is for storage purpose, storage of our luggage. Then battery operated car services, very common. Recently, I myself have used this services of battery operated car service. I was traveling somewhere with my parents and in the railway station there was a facility of battery operated car services. For that earlier there used to be GST, but now there is no GST at all because it is exempt. So what is the exemption, my dear friends? Service provided by Indian Railways to individuals by way of sale of platform tickets, facility of waiting rooms or retiring rooms, clock room services, battery operated car services. These services are straight away exempt. Next point. Service provided by one zone or division under Ministry of Railways, Indian Railways, to another under Ministry of Indian Railways. That means what? One division of Indian Railways is giving service to another division of Indian Railways. That service will straight away be exempt. Next point. Service provided by SPVs, special purpose vehicles, to Indian Railways by allowing Indian Railways to use the infrastructure built and owned by them during the concession period against consideration. So who is giving service to whom? Special purpose vehicles are giving service to Indian Railways, and what kind of service they are giving? They are allowing them to use the infrastructure built and owned by the special purpose vehicles. And service of maintenance supplied by Indian Railways to special purpose vehicle in relation to said infrastructure built and owned by special purpose vehicle during the concession period. That is a contract period against consideration. So that two services will be exempt. So service given by SPVs to Indian Railways, allowing them to use the infrastructure, that will be exempt, and service of maintenance given by Indian Railways to SPVs, that is also exempt. Clarification related to GTA, my dear friends. So we all know that GTA means Goods Transport Agency. They are basically engaged in service of transportation of goods by road. And along with service of transportation of goods by road, they provide some incidental services such as packing, warehousing, storage. They are all incidental services in relation to transportation of goods by road. And they have clearly clarified that these incidental services are an integral part of GTA service, but they are not separate. That's what they have clearly clarified. See that? It is clarified by CBIC that ancillary or incidental services provided by GTA in the course of transportation of goods by road, such as loading, unloading, packing, unpacking, transshipment, warehousing, will be treated as composite supply of transport of goods. The method of invoicing used by GTA will not alter the nature of composite supply of service. However, if services are not provided in the course of transportation of goods and are invoiced separately, then they are not treated as composite supply. If they are not bundled together, that is separately given, then we will not treat it as composite supply. Because we all know that in order to treat it as composite supply, there are two important elements. Number one, they are naturally bundled. Number two, one of which is a principal supply. These two elements are mandatory in order to treat a supply as composite supply. General insurance business services. Services by way of reinsurance of the insurance schemes specified in serial number 35, 36, 40. They talk about cattle insurance, hut insurance, life insurance, some specified schemes, general insurance, some specified schemes, that is exempt. Reinsurance is also exempt. Reinsurance means some part of insurance is reinsured by the insurance company with another insurance company. Retrocession, that means reinsurance transaction whereby a part of assumed reinsured risk is further ceded to another Indian insurer or a cross-border reinsurer. It has been clarified that the term reinsurance includes retrocession services. So reinsurance is again reinsured. That is called retrocession. That is also exempt. Next. Service provided to governmental authority. Already we discussed this before itself. Service provided to governmental authority by way of water supply, public health. Come on friends, what service it is covered here? Water supply. Come on, service provided to governmental authority by way of water supply, public health, sanitation conservancy, solid waste management and slum improvement. These all services are exempt. Come on friends, what is exempt? Water supply. Come on, water supply, public health, sanitation conservancy, solid waste management, slum improvement. These services which are provided to governmental authority, that service will be exempt. Next point, very, very important point. Supply of accommodation service having value of supply less than or equal to 20,000 rupees per person per month. Sir, basically we are talking about hostel or PG, that is paying guest, where the value of supply is less than or equal to 20,000 rupees and accommodation is service is given for a minimum continuous period of 90 days. It is given for a minimum 90 days and the value of supply is less than or equal to 20,000 rupees per person per month. Then in that case, that service will be exempt. Getting the point? Next. Supply of service by way of providing metering equipment on rent, testing meters, transformers, capacitors, etc., releasing electricity connection, shifting of meters or service lines, issuing duplicate bills. They are all incidental to electricity distribution, my dear friends, which are incidental or ancillary to supply of transmission and of electricity provided by electricity transmission distribution utilities to their consumers. So automatically they will all be exempt. What is exempt? Giving metering equipment on rent, testing meters, transformers, capacitors, releasing electricity connection, shifting of meters, issuing duplicate bills. These all services are exempt. Next. Service of affiliation. So affiliation is nothing but recognition, which are generally given by for some schools or colleges by government recognized universities associations. See now, affiliation provided by central or state educational council or any other similar by whatever name called to an establishment owned or controlled by central government, state government, unitary, local authority, governmental authority or government entity. I repeat once again, to an established, owned or controlled by central government, state government, union territory, local authority, government authority or government entity. So if service is given to these people, then only it is exempt. But if affiliation service is given to other schools, universities, colleges, then that will definitely become taxable. I repeat that line once again. Affiliation given to other schools, universities, colleges would be definitely be taxable. Very, very important point, friends. Next line. Research and development service against consideration received in the form of grants supplied by government entity or a research association, university or college or institution notified under Income Tax Act. So R&D service given by them will be exempt where they get consideration in the form of grant. But the condition to be fulfilled in this case is that the research association, university or college notified under income tax is notified at the time of supply of that R&D service. That means at the time when they are giving service, it must be notified by Income Tax Act under section 35, my dear friends. You would have heard this in income tax syllabus, direct tax. Next. Entry number 69 related to skill development, friends. Please see that. Any service provided by National Skill Development Corporation set up by Government of India, National Council for Vocational Education and Training, an awarding body recognized by National Council for Vocational Education and Training, assessment agency recognized by National Council for Vocational Education and Training, a training body accredited with an awarding body that is recognized by National Council for Vocational Education and Training. And what is that they are giving? What is that service they are giving? That service is in relation to National Skill Development Program or any other program implemented by National Skill Development Corporation, or a vocational skill development course under National Skill Certification and Monetary Reward Scheme, or any national skill qualification framework, aligned qualification or skill in respect of which National Council for Vocational Education and Training has approved a qualification package. Basically, these are all under control of Ministry of Skill Development. They ensure that they conduct small-time courses like maybe some stitching, mobile repairing, or some small-time courses in order to ensure that unemployed youth get employed. And these are all under initiative of Ministry of Skill Development, and they have an authority or a board known as National Skill Development Corporation or National Council for Vocational Education and Training. They provide service of skill development programs or vocational skill development courses. That service will be exempt. Next. Approved flying training courses conducted by Flying Training Organization approved by Director General of Civil Aviation. So these are basically service of education as a part of qualification recognized by the law. If education service is being given for obtaining a qualification recognized by the law, that service is exempt in GST. We know this point, which we learnt in education service in exemptions topic. See that? The approved flying training courses conducted by FTOs, that is Flying Training Organizations approved by DGCA, Director General of Civil Aviation, wherein the DGCA mandates the requirement of completion certificate are exempt as service provided by education institution, an institution providing services by way of education as a part of curriculum for obtaining qualification recognized by any law for time being in force to students, faculty and staff are exempt from levy of GST. Next. Statutory collections made by RERA. So RERA is a government authority and any collections made by RERA is exempt because it's clearly a governmental authority. Next point. Import of services by an establishment of a foreign company in India, which is an airline company, from related person or from any of its establishment outside India when made without consideration. Sir, who is importing service? See the point very clearly. Import of services by an establishment of a foreign company in India, which is an airline company. Example, maybe an establishment of Qatar Airways, establishment of Emirates, establishment of Singapore Airlines or Malaysian Airlines. We're talking about foreign airline company from a related person or from any establishment outside India. What is the condition? GST at applicable rates is paid by establishment of foreign airline company in India on transport of goods or passengers as may be applicable. That means the foreign airline company is paying tax in India. And Ministry of Civil Aviation certifies that the establishment of foreign company in India is that of an airline company which has been designated by the foreign government under applicable bilateral air service agreement. And Ministry of Civil Aviation certifies that on reciprocal basis, that means what? Indian airline companies are not subject to levy of similar taxes by whatever name called for the same service appearing under the entry. That means what? We are telling if our Indian airline company which is there in foreign is importing service from India, please don't tax them in foreign country. If you don't tax them, we will also not tax your airline company which is there in India. It's a reciprocal agreement. Getting the point? That's it, my dear friends. These are all the interesting amendments with respect to exemptions topic. Now let's move forward to next topic, my dear friends. That is exemptions in the topic of value of supply. Only one point is there, please see that. In case of corporate guarantee, we know that valuation is given by Rule 28. If it is given by director, there is no value of supply because as per RBI norms, they should not charge consideration. But if a holding company is giving guarantee to loan taken by subsidiary company, value of supply will be actual guarantee commission or 1% of amount guaranteed. Correct, no friends? But what is that 1% is what we have to see. Please see that, come on. Value of supply will be 1% of amount guaranteed per annum. 1% is per annum. If it is 6 months, you take 0.5%. If it is 7 months, then you take 1% into 7 by 12. Or actual consideration, whichever is higher. And value of supply is based on amount guaranteed and not based on amount disbursed. Amount disbursed is not the criteria. Amount guaranteed is the criteria. Next line. In case of loan, I repeat once again, in case of loan given by an overseas affiliate, that means a foreign entity, to an Indian party, where there is no consideration in the form of processing fee, but there is only interest or a discount, then it cannot be said that any supply of service is being provided between related persons in the form of processing or facilitating the loan. However, if any fee is charged separately over and above the interest, then GST will apply on that. Obviously, on that processing fees and all, GST will be definitely apply if it is separately charged. If it is not separately charged, then we will not say that it is deemed to be supplied. Clear? Good. Now moving ahead, amendments in place of supply topic. In case of supply of goods to an unregistered person through e-commerce operator, place of supply will be delivery address and not the billing address. Already we know this, my dear friends. Section 10(1) CA of IGST Act. What is the point? Sir, Shivateja is sitting in India. Assume that Shivateja is unregistered person. I am sitting, let us say, in Delhi. I opened Amazon and placed the order for a product. I am unregistered person. I gave billing address as Delhi and I gave delivery address as, let us say, delivery address as Tamil Nadu, let us say Chennai. In that case, place of supply will be delivery address but not the billing address. And this will apply only if the person is an unregistered person. So in case of supply of goods to unregistered person through e-commerce operator, place of supply will be delivery address and not the billing address. Next, place of supply in case of custodial services by the bank. So custodial service is something like maintaining the share account, securities account, demat account, something like that. Custodial service provided by the bank or institution to FPIs, they are not treated as service to account holders. If it is not service to account holders, then 13(8)(a) will not come. 13(8)(a) is bank service by bank to account holders. If it is not covered in 13(8)(a), then automatically place of service is determined by applying the default provision 13(2), my dear friends. Next, place of supply in case of hosting services, DHSP, data hosting service providers, my dear friends. They provide data hosting services to CCSP, that is cloud computing storage provider, on principal to principal basis on his own account and is not acting as a broker or agent for facilitating supply of service between CCSP and the end consumer. And data hosting service provided by data hosting service provider to CCSP cannot be considered in relation to goods made available. And they cannot be considered as service in relation to immovable property. And if it is not service in relation to immovable property, if it is not intermediary service, automatically place of supply will be governed by general rule, that is 13.2, my dear friends. And 13.2 always says place of supply will be location of recipient if it is available in the ordinary course of business. But if location of recipient is not available in the ordinary course of business, place of supply will be location of supplier. That's it. These are the interesting amendments in the topic of place of supply. Now moving ahead to very important topic, amendments with respect to topic of input tax credit. Come on friends, now let's talk about the amendments in input tax credit topic. A very important topic. We know that short question will come in the examination from this topic of ITC. Now see the amendments, guys. The first point, 16.2AA read with rule 36.4. Details of invoice or debit note uploaded by supplier in his GSTR1 or using IFF, that is in case of QRMP scheme, shall be communicated in form GSTR2B. We know very clearly that practically now a recipient can claim input tax credit only if the credit populates in GSTR2B. If credit doesn't populate in 2B, you cannot take input more than that. That is a rule. Clear, friends? Next. Clarification on time limit under section 16.4. What is 16.4? Maximum time limit to avail the credit. And what is the maximum time limit, my dear friends? 30th November following the end of financial year or actual date of filing annual return, whichever is earlier. Now there is an interesting clarification which is given in respect of RCM supplies received from unregistered person. Sir, we know that if a transaction is covered in RCM, then recipient is liable to pay GST. But what if a transaction is covered in RCM, supplier is unregistered person, recipient is registered person? Then in that case, recipient is required to do self-invoicing on his own name and then create an invoice and required to pay GST to the government. In that case, my dear friends, for calculation of time limit for availment of ITC under 16.4 will be the financial year in which invoice has been issued by recipient, subject to payment of tax on supply by recipient and fulfillment of other conditions. So ultimately we will see the time limit based on the financial year in which invoice is given by recipient himself, because this transaction is covered in RCM and supplier is unregistered person. Next point. Time limit for taking ITC in case of revoked registration cancellation. So in case where registration is cancelled and subsequently it is revoked. Possible, right? Exactly. Now in that case, my dear friends, in case where recipient has missed out claiming ITC because registration is cancelled, once revocation is done, he can claim ITC. But we know that the maximum time limit to claim ITC is 30th November following the end of financial year or date of filing annual return, whichever is earlier. But they gave a time limit of something like this, that relaxation has been given and time limit to avail ITC is extended till the date of filing return. In case where returns for the period from the date of cancellation till the date of revocation are filed within 30 days of revocation of cancellation, but subject to one condition that the time limit to avail ITC has not already expired on the date of cancellation of registration. Sir, if on the date of cancellation of registration that time limit is already expired, then you can't take input tax credit. Obviously, because if it's already expired, till now what you were doing without claiming credit? You got the logic there, right? Exactly. Next. Clarification of availability of ITC in case of ducts and manholes used in network of optical fiber cables, OFCs. They have clarified that these ducts and manholes are a part of plant and machinery, which is a part of optical fiber cables, and ITC will be allowed. Please see that. Ducts and manholes are basic components for optical fiber cable network used in providing telecommunication services. The OFC network is generally laid with the use of PVC ducts or sheets in which OFCs are housed and service or connectivity manholes, which serve as a nodes of network and are necessary for not only laying of optical fiber cable but also their upkeep and maintenance. In view of explanation in section 17, it appears that ducts and manholes are covered in definition of planetary machinery, as they are used as a part of OFC network for making outward supply of transmission of communication signals from one point to another. And moreover, ducts and manholes used in network of optic fiber cables have not been specifically excluded in definition of planetary machinery. And they are neither land, they are neither building, they are not civil structure, they are not telecommunication towers. So automatically on this ducts and manholes used in network of optical fiber cables, ITC will be allowed. Next, clarification on availability of ITC in respect of demo vehicles, which are motor vehicles having seating capacity of not more than 13 persons. We know that generally motor vehicles where seating capacity is not more than 13 persons, ITC is not allowed because it is blocked as per section 17(5) clause A. But in case of demo vehicles, they have clarified that ITC will be allowed because they are used in the course of furtherance of business. Without demo vehicle, how will the customer come and do the testing, guys? How will he check the vehicle? As demo vehicles are used by authorized dealers to provide trial run and to demonstrate features of the vehicle to potential buyers. It helps the potential buyers to make a decision to purchase a particular kind of motor vehicle. Therefore, these demo vehicles promote sale of similar type of vehicles. They can be considered to be used by the dealer for making further supply of such motor vehicle. And accordingly, input tax credit for demo vehicle is not blocked. A very interesting point. Clear, friends? Next. Clarification on availability of ITC in respect of warranty replacement of parts and repair service during warranty period. First, let me explain you what is the logic behind this, then we'll dig into the details. Sir, whenever you buy a car, let's say we went and purchased the car cost is 30 lakh rupees. 30 lakh rupees is the cost of the car. And this 30 lakhs includes 2 years warranty. There is a possibility that customer might take extended warranty by paying extra 2 lakh rupees. Instead of paying 30 lakhs, he paid 32 lakhs and he took extended warranty. What is the purpose for which extended warranty is taken? In that extra 2 years, if there is a problem for any part of the car, what will happen is during that warranty period, that part will be replaced free of cost. When it is replaced free of cost, will there a GST liability? Obviously, answer is no, because starting only when extra warranty charges is collected, that time only GST would have been paid. Correct, friends? Now there is a car dealer who is working on behalf of the car manufacturing company who provide replacements of the parts. How does he do it? See that. There are cases where original equipment manufacturer offers warranty for the goods supplied by him to the customer and provides a replacement of parts or goods to the customer during warranty period without separately charging any consideration. Obviously, whether manufacturer is required to reverse the ITC in respect of replacement of goods or parts as the case may be, or supply of repair service in respect of which no consideration is charged from the customer. See that point? In such cases, value of original supply of goods provided along with warranty by manufacturer to the customer. So manufacturer himself is replacing. It includes the cost of replacement of parts as the case may be, or repair service to be incurred during warranty period. Therefore, these supplies cannot be considered as exempt supply, and accordingly, manufacturer who provides a replacement to the customer is not required to reverse ITC in respect of replacement of goods or repair services. So first case is a case where manufacturer himself is providing the replacement service or repair service. Next, distributor is providing replacement of parts on behalf of manufacturer. Distributor is providing, friends. Then there are 4 possibilities. Case number 1. Distributor replaces the part to the customer under warranty either by using his own stock or by purchasing from third party and charges consideration of the part so replaced from the manufacturer by giving tax invoice. That means what? Let us say there is Benz car company, the Benz car dealer. Benz car dealer has replaced the part and the cost of the part is being taken from the Benz car company. Then in such case, GST will be payable by the distributor on the set supply by him to the manufacturer. And the manufacturer can take ITC subject to other condition. And no reversal of ITC is required by the distributor in respect of the same. Second situation, There may be cases where distributor raises a requisition to the manufacturer for the part to be replaced by him under the warranty, and the manufacturer then gives the part. So what was the first case? Distributor himself replaced and then taking money from manufacturer. Second case, distributor is asking the part from the manufacturer. In such a case, where the manufacturer is providing the part to the distributor for replacement to the customer during warranty period without separately charging any consideration at the time of replacement. No GST is payable on replacement of part by manufacturer and no reversal of ITC is required. Obviously, friends. Third situation, distributor replaces the part out of stock already received and manufacturer is giving credit note. And if credit note is given, what will happen? We already know. The tax liability will be adjusted accordingly. First case, distributor replaces the part and takes money from manufacturer. Second case, distributor is taking part only from manufacturer. Third case, distributor replaces the part and manufacturer is giving credit note. Next, fourth case, distributor replaces the goods or parts under warranty and then raises a requisition to manufacturer for the part. Second case is different, this case is different. Second case, he used his own part. And then first case is using his own part and taking money from manufacturer. Second case, using his own part, manufacturer replaced the part. Third case is credit note. Fourth case, he is using his own part and then taking part from manufacturer through a delivery challan without separately charging consideration. In such case, no GST is payable on replacement of that part and no reversal of ITC also is required. Then finally, what will happen if distributor is giving repair service? There is a supply of service by distributor and manufacturer is a recipient of service. And GST would be payable on provision of service by distributor to the manufacturer and manufacturer can take ITC of the same. Previous point was about replacement of part. This point is about repair service. Next, clarification on requirement of reversal of ITC in respect of portion of premium for life insurance policy which are not included in taxable value. Friends, we know that Rule 32.4 talks about value of supply in case of life insurance policy, where we discussed that single premium annuity policy 10% of premium charge, general policy 25% for first year premium, 12.5% for second and subsequent premium. When let us say insurance premium paid is 1 lakh, GST is coming on 25,000 only, assume first year premium. On 75,000 GST is not being charged. Just because GST is not being charged on 75,000, we will not say that 75,000 is exempt supply. Because once we say exempt supply, ITC reversal requirement will come into picture. That's a problem. See now, it is clarified that amount of premium for which is not included in the taxable value, it cannot be considered as pertaining to not taxable or exempt supply. And therefore, there is no requirement of reversal of ITC, my dear friends. Entitlement of ITC by insurance company on expense incurred for repair of motor vehicles in case of reimbursement mode of insurance claim settlement. So whenever there is an accident or damage to our car or bike, we go to service center and there are two possibilities. One, we claim cashless. Cashless means what? Insurance company will directly pay to that service provider and will go and take the car. Second is reimbursement mode. We pay the bill and then claim reimbursement from insurance company. Under reimbursement mode of settlement, the insured avails repair services from non-network garages with the insurance company do not have routine business relationship and the said garage issues invoice in the name of insurance company. Obviously, ITC is available to insurance company for motor vehicle repair expense incurred under reimbursement mode. Conditions: invoice are issued in the name of insurance company and ITC is claimed attributable only to the amount reimbursed. Accordingly, policy holder makes payment for repair service and subsequently insurance company reimburses the approved claim cost to the insured. Further, irrespective of the fact that payment of repair service to garage is made by the insured and then reimbursed by the insurance company to the insured to the extent of approved claim cost, the liability to pay for the repair service for the approved claim cost lies with insurance company only, and thus they are covered in definition of recipient to the extent of approved repair liability. Moreover, the ITC on the motor vehicle repair service received by insurance company for the outward supply of repair services for motor vehicle is not barred. That means ITC will be allowed because it is not blocked. Accordingly, it is clarified that ITC is available to the insurance company in respect of motor vehicle repair expenses incurred by them in case of reimbursement mode. And what are the issues they have clarified? What is the extent of ITC available? ITC is available only to the extent the amount is reimbursed, obviously. What is the extent of ITC available in case of single invoice given by garage for full amount of repair and insurance company reimburse only part amount? ITC is available only to the extent of reimbursement of approved claim cost to the insured and not on the full invoice value. Of course, a very, very important point. Finally, whether ITC is available to the insurer if invoice for vehicle repair is not in the insurance company name. Sir, if invoice is not in insurance company name, ITC will never be available, because invoice tax paying document is a mandatory evidence for the purpose of claiming credit. So these are the very, very interesting, important amendments in ITC topic, friends. And I'm pretty sure till this point you are very clear. Any doubts? Chat box, comment section or forums will be more than happy to reply, because your success is our success. Clear, friends? Come on, let's move to next topic, registration. Friends, now that we are done with amendments with respect to ITC topic, let's move out to next interesting amendments in the next topic, my dear friends. Friends, this video is very important. Right from start to the end, this video has got a lot of important points. Please don't miss out. Please focus. Sounds like I'm telling this point again and again, but high probability that a question may trigger in the examination. Please see that. Next, amendment with respect to topic of registration. First point. Persons making intrastate supplies of goods through e-commerce operator with aggregate turnover up to threshold limit. Friends, logic of this point is very simple. Earlier, there was one point which clearly said that if a person is supplying goods through e-commerce operator, come on, what is that line? If a person is supplying goods through e-commerce operator, registration is mandatory. But now they have specified that if a person is supplying goods through e-commerce operator, registration is not required unless you don't cross threshold limit, provided some conditions are satisfied. Some important conditions such as you are not engaged in interstate supply, you are not operating in more than one state, you have a PAN, you have obtained an enrollment number on the GST portal. So these all conditions is what they have given. So first, you should not make any interstate supply of goods. You are not in more than one state or union territory. You must definitely have a PAN, and using that PAN, address and state, you must get one enrollment number on the GST portal. And no supply of goods shall be made by such persons through ECO unless persons have been granted enrollment number. And where such persons are subsequently granted registration, that means what? You got normal registration. Enrollment number shall cease to be valid from effective date of registration. Obviously, because once you get normal registration, then what is the use of enrollment number? Next slide. Furnishing of bank account details, my dear friends. Important concept. Ideally, once upon a time when GST law started, there was a mandatory requirement of updating bank account details at the time of applying registration itself. But subsequently, they brought amendment by introduction of Rule 10A, where they have specified that bank account details can be updated subsequently after obtaining registration also within 30 days. Within 30 days from date of grant of registration or from due date of filing GSTR1, whichever is earlier, you please update that. But this relaxation, my dear friends, is not available to those who have been granted registration as TDS director or TCS collector or suo motu registration. That means what? For these people, they have to update the bank account details at the time of filing application itself, not subsequently. Clear? Next. Revocation of cancellation of registration. Sir, any person whose registration is cancelled, maybe because returns are not filed, not operating from registered place of business, issuing invoice without supply, supplying without invoice, whatever case it is, my dear friends. In that case, my dear friends, you can apply for revocation of cancellation, and you can apply within a period of 90 days. And this 90 days can be further extended up to maximum further period not exceeding 180 days. And this extension will be given by commissioner or any officer authorized by commissioner not below the rank of additional or joint commissioner, my dear friends. First basic period is 90 days and commissioner or any other officer not below additional or joint commissioner can extend for further period not exceeding 180 days. If PO is satisfied that there is sufficient reason for revocation, he may pass order within 30 days from receipt of application. And if he wants to reject, my dear friends, he can reject, but before rejecting, he must give a notice and grant 7 days time to reply. And the reason for that logic is very simple, that you have to give something called opportunity of being heard. Technically, we call it as principles of natural justice. Next point. Amendment in the topic of tax invoice credit note, debit notes. In case of supply of online money gaming, which has become very common nowadays, lot of online games with respect to cards, cricket, whatnot, very dangerous. In cases involving supply of online money gaming, or in cases where taxable service is supplied or through an eco or supplier of order service to recipient who is unregistered, irrespective of value of supply, that word is very important, irrespective of value of supply, a tax invoice issued by the registered person shall contain, that means what? Mandatorily contain the name of the state of the recipient. What it must contain, my dear friends? Name of the state of the recipient, and the same shall be deemed to be address on record of the recipient. So it is very important that the tax invoice must contain name of the state of recipient. Next slide. Amendments in payment of tax topic, my dear friends. Interest on delayed payment rule 88B, an important concept which I'll make you recollect once again. So let us say, for example, if any registered person made some taxable supplies in the month of August, and in August month return only he has declared the taxable supply, before he got notice only he filed the return, but he filed the return after the due date. Then law specifies that you are required to pay interest at the rate of 18% per annum on the amount paid using cash ledger. That means what? If 100 rupees is the output tax liability, 70 rupees is the credit ledger balance what you have got, you please pay interest only on 30 rupees. But the interesting concept what they have clarified is that, imagine a case where there is a cash ledger balance of 20 rupees which is deposited in the cash ledger on or before the due date itself. Then law is telling don't pay interest on that 20, then pay interest only on that 10 rupees. That means what? 100 rupees is the output tax liability, 70 rupees is the credit ledger ITC balance, then what is the net payable using cash ledger? 30 rupees. And out of that 30 rupees, 20 rupees is there in the cash ledger on or before the due date of return itself. Then law is telling on that 20 also don't pay interest, then pay interest only on 10 rupees. Provided that amount is there in the cash ledger on or before the due date of filing the return, but it is debited while filing the return. But if that amount should be there in the cash ledger from the due date till the date of debit, only then on that amount we are not going to charge any interest, my dear friends. Interesting point. Next, moving forward, amendments in the topic of TDS and TCS. I'm sure we all know that TDS concept is given by section 51, TCS is given by section 52. In TCS, not major amendment, only rate of TCS got reduced. But in TDS, my dear friends, we know that TDS concept is applicable to any department of central government, state government, and also in case of government entity, and also in case of public sector undertaking. And one latest point they brought in case of TDS, my dear friends, that is any registered person receiving supplies of metal scrap from another registered person. Sir, see that line? Any registered person, that means a registered person is receiving supplies of metal scrap. Any registered person receiving supplies of metal scrap from other registered person. This is covered in TDS provision. That means what? Recipient is required to do TDS at the rate of 1% plus 1%. If it is CGST, SGST. If it is IGST, directly at the rate of 2% on the base value, excluding GST. Categories of person not liable to deduct TDS. Tax is not liable to be deducted at source in the following cases: where goods or services are supplied from a PSU to another PSU. Next, supply of goods service takes place between one person to another person specified in clause A, B, C, D, except the person specified in clause D. That is, clause D is nothing but the point of registered person receiving supplies of metal scrap from other registered person. It has been further provided that TDS should be deducted by the recipient on supply of metal scrap even when it is supplied between persons mentioned in A, B, C, D. I'll repeat that line once again. Please see that. It has been further provided that TDS shall be deducted by the recipient on supply of metal scrap even when it is supplied between the persons specified in A, B, C, D of 51. That means what? If there is supply of metal scrap from PSU to PSU, then TDS provision will apply. Important point. Latest amendment. Question can come. Next. Rate of TCS. This got reduced, my dear friends. Once upon a time it was 0.5 plus 0.5 IGST 1%, and now it is reduced to 0.25% plus 0.25%. If it is IGST, it is 0.5%. That's it. That's amendment with respect to TDS and TCS. Few more interesting points are there. Let's see that also, my dear friends. Come on. Now, friends, let's look at the amendments in returns topic, guys. Please see that. Returns, the first point. Registered person shall not be allowed to furnish GSTR1 if he has not furnished the bank account details as per Rule 10A. I just told you that you have to update your bank account details within 30 days from obtaining your registration certificate or the due date of filing GSTR1, whichever is earlier. If you don't do that, what will happen, my dear friends? You will not be allowed to file GST return. Next. Details of outward supplies in GST1 and IFF. A simple amendment. Let me clarify in 2 lines. Sir, in GSTR1 or IFF, we know the concept very clearly that we are required to give invoice-wise details in 2 cases. Number 1, B2B transaction. Number 2, B2C if it is interstate where the value is more than 2,50,000. Where the invoice value is more than 2,50,000. This point has now been amended to 1 lakh. Please see that. Invoice-wise details of all interstate and intrastate supplies made to B2B person and intrastate supplies to unregistered supplier with invoice value exceeding 1 lakh. So what are the cases where invoice-wise details are mandatory, my dear friends? Number 1, B2B. Number 2, interstate B2C where invoice value is more than 1 lakh. How are the details of outward supply furnished in the current period amended? So once upon a time we had a concept which is there now also, that is if we file GSTR1, we made a mistake in the GSTR1. We can rectify the mistake by using one column called amendment column. In next month GSTR1, we'll use that amendment column and rectify the mistake. But recently they introduced a concept known as GSTR1A. GSTR1A, where they have specified that after you file GSTR1, and before filing GSTR3B, if you realize that there is any mistake done in GSTR1, you can rectify that mistake of GSTR1 in the same month itself by filing something called GSTR1A, a latest new introduction. See this. In case where a taxpayer, after having filed GSTR1, realizes that some amendment, which could be downward or upward, increase or decrease, is required to be made in tax liability in GSTR1, an optional form GSTR1A is provided to him. This allows him to add any particulars of the current tax period missed out in reporting in form GSTR1 of current tax period or amend any particulars already declared in GSTR1 of the current tax period, including those declared in IFF for first and subsequent months of a quarter. If any registered person may, after furnishing the details of outward supplies in GSTR1 for a tax period, but before filing 3B, can amend or furnish additional details in GSTR1A. GSTR1A can be done only before 3B, my dear friends. After 3B, you can't do it. GSTR1A is optional facility. It can be filed once for a return period. It allows to amend records filed in GSTR1 of a current tax period only, and the corresponding effects of changes made through GSTR1A on the liability shall be reflected in the 3B of the same tax period. And at the recipient's end, for the recipient, my dear friends, ITC for the supplies declared or amended by suppliers through GSTR1A will be available to the recipient in form 2B generated for next tax period. Obviously logical point, because if supplier files GSTR1 within the due date, only then the credit will come to recipient in GSTR2B. It can be amended only electronically through common portal, either directly or through facilitation center as notified by commissioner. Next amendment in returns. GSTR 4 time limit amendment. GSTR 4 is basically an annual return to be filed by composition registered person. Once upon a time, the time limit was 30th April following the end of financial year. This point is now amended and changed to 30th June following the end of financial year. So GSTR 4 is to be filed by 30th June following the end of financial year. So that's an interesting amendment in returns topic, my dear friends. Let's proceed to amendments in next topic, guys. Friends, come on. Next topic of amendments is appeals and revisions topic, my dear friends. Please, let's see what is the amendment. Following monetary limits have been fixed for filing appeal or application or special leave petition by the central tax officers. That means basically this is the monetary limits for filing of appeal by departmental officers. Section 120, filing of appeal by department officers. For that they have fixed monetary limits. What is that limits? Please see. For tribunal it is 20 lakhs. For High Court it is 1 crore. For Supreme Court it is 2 crores. These limits are only for filing of appeal by department officers, not for filing of appeal by taxpayers, my dear friends. And what are the principles we'll take? Come on, for tribunal, what is the limit? 20 lakhs. High Court 1 crore. Supreme Court 2 crores. If it is less than that, law is telling don't waste government's time. And these limits are only for appeal by department officers. But how do we calculate this 20 lakhs, 1 crore or 2 crores? If it is only tax which is involved, we will see only the tax in dispute. And the tax means CGST, SGST, IGST and the compensation cess also. Only interest, please see interest. Only penalty, please see penalty. Only late fees, please see late fees. Interest, penalty, late fees is there without involving tax, then aggregate of interest, late fee, penalty. Erroneous refund, we will see the amount of refund in dispute. All taxes together, CGST, SGST, IGST and compensation cess also. Next. Following cases to be taken on merits irrespective of monetary limits. That means even though it does not exceed 20 lakhs, 1 crore, 2 crores, still appeal can be filed by department officer based on merits. What are those cases? Number 1, where any provision of the act has been held to be ultra vires of the constitution. That means you are questioning the provision of the act stating is ultra vires. Where any rules regulation has been held to be ultra vires. Where any notification, order, instruction is held to be ultra vires. Where a matter is related to valuation, classification, refunds, POS, any other issue, which is recurring in nature. Come on friends, which is what in nature? Recurring in nature and or involves interpretation of provisions of the act, rules, notification, circulars, order, instruction. Next, where strictures or adverse comments have been passed and has been imposed and the cost has been imposed against the department officers. Any other case or class of cases where in the opinion of the board, it is necessary to contest in the interest of justice or revenue. So in all these cases, my dear friends, irrespective of limit not being crossed, still department can file appeal. Friends, we are done with discussion of amendments in appeals and revisions topic. We have discussed almost all the amendments which have come up for May 2025 examination, but we still have few more small points to go. We are at the fag end of the discussion, my dear friends. Come on, please see that. Come on, my dear students, please see that. Miscellaneous provisions. Anti-profiteering measure. We know what is anti-profiteering authority, where they ensure that there is any rate reduction in GST, the benefit is being passed on to the consumer. Businessman should not enjoy that money. Authority means authority constituted and notified under subsection 2 of 171. Anti-profiteering authority has been constituted by central government to examine whether ITC availed by registered person or the reduction in rate have actually resulted in commensurate reduction in price of goods or service supplied by him. The government has empowered the Competition Commission of India, very important word, established under Section 7 of Competition Act as an authority under 171. Earlier, National Anti-Profit Authority was constituted and now that authority is abolished with effect from 1/12/2022. Henceforth, all investigation based on complaints filed by consumer will be done by Director General of Anti-Profiteering and they will then submit a report to Competition Commission of India, because now there is no concept of National Anti-Profiteering Authority. Next, central government has empowered the principal branch of appellate tribunal. Principal bench, sir, where there is place of supply matter. We learned this in appeals and revision. to hear cases of anti-profiteering and examine whether ITC availed by registered person or reduction in rate have resulted in commensurate reduction in prices. This notification has become effective from 1st October 2024. And sunset for anti-profiteering, central government has appointed 1st April 2025 as the date from which anti-profiteering authority shall not accept any request for examination as to whether ITC availed by registered person or the reduction in rate have actually resulted in commensurate reduction in price of the goods or service or both supplied by that registered person. Next, amendments in refunds topic, a very small amendment, my dear friends. Rule 89.4 talks about refund in case of zero rated supply. 89.5 talks about refund in case of inverted duty structure. In both the formulas, they have removed the concept of reference to Rule 89.4A and 89.4B. That is merchant exports, deemed exports, that reference have been completely been omitted. So formula is now straight, simple. It's a plain vanilla without reference to deemed export, merchant exports of Rule 89.4A and 89.4B. Clear? Done. Finally, 1-2 small amendments in customs topic, my dear friends. Let me explain to that also. Customs, not really much of amendments, but still, since it is important, we discuss in that. Section 20, reimportation of goods. So section 20 we would have already learned during our discussion, where we imported goods and the same goods is exported for the purpose of repairs, and after repairs we are reimporting it. Same goods are imported without manufacture and all. In that case, we have clearly discussed that we are required to pay customs duty on fair cost of repairs plus insurance and freight 2 ways, correct? Earlier, the reimportation time limit was 3 years, extendable by 2 years. But now there is a small amendment that reimportation time limit is 5 years and further extendable for a period up to 2 years. This is a small change. Earlier it was 3 years and 2 years. Now it is 5 years and 2 years. That's it. And finally, one last point, concept of protective duty has been removed. This concept was there in types of duty topic. This protective duty concept is now completely removed, my dear friends. That's it. That's the end of story of amendments in customs, and that's the end of story of amendments applicable for May 2025 examination for CA final indirect tax laws. And this is the ultimate solution. Don't waste your time on big discussions and too much of elaboration and all. This is the content, this is the concept, and this is the solution for May 2025 exam amendments for CA final indirect tax laws. Thank you so much, my dear friends. Shivateja signing off from IndigoLearn. Wish you all the very best. Wish you all success. Do come out with flying colors. Any doubts, anytime, we're always there for your support. Thank you.